the month of October, featuring Jason Yelowitz, one of our very own. Okay. All right. Well, hopefully everyone is settled and ready. And I think we will jump in. So good morning or good afternoon, depending where you are. Welcome to Selling an 8-Figure Amazon Business with Jason Yelowitz. Again, I mentioned this if you were on a couple minutes ago. This is Quiet Light's monthly AMA series. So for those of you who may not be super familiar with Quiet Light, I'll give you a quick background. Quiet Light helps entrepreneurs buy, build, and sell businesses for 6, 7, and 8 figures. A big part of what we do is very educational. So think podcasts, webinars just like this, speaking at conferences. We write lots of articles and blogs. So if after this hour, you're still thirsty for more content, you can check out quietlight.com. And we have tons of resources on there for you to go through. And then my personal favorite part about Quiet Light, it's completely entrepreneur-led and entrepreneur-focused. So all of the advisors on the team have been buying, selling, or building businesses at some point in their lives, currently in their lives. So they are truly, they understand exactly where all of you are at in your process, wherever that might be. So moving on from Quiet Light, let's introduce Jason Yelowitz, our guest for today.
Hey, Sam, how are you?
Good morning, Jason. I'm good. I like your fish tank.
Oh, thanks. Yeah,
it's a good Zoom background.
Yeah, I appreciate it. In the old days, we had screensavers that looked just like that, but I wanted the real thing.
Yeah, I love it. Some featured special guests. We're giving our audience some bonus guests today. I love it. So Jason is based in Reno, Nevada, and he is a speaker, author, and currently he is a senior advisor and a serial entrepreneur at Quiet Light. He's actually the longest serving advisor at Quiet Light. So if you're really looking for that, extremely well tenured, has literally seen it all, been in your shoes for miles and miles and miles, Jason is your advisor. In fact, since joining Quiet Light in 2010, he has become the most requested advisor on the team, which makes sense because actually Jason's profile is sort of what we look for when we go to expand the team and look for new advisors. So sort of a quick anecdote on that. Mark Doust, the founder of Quiet Light, wrote an article for Forbes explaining how he was able to go from a one-man show to a multiple-man show and growing the team. And as part of that process, as a former client, Jason came over and said, "Hey, Mark, I would love to join the team." And Mark, what I hope was politely said no, but Jason was not quite willing to take that for an answer. And I'll just share my favorite quote, as Mark put it. When he asked again, I said no again and again. But to his credit, Jason Yelowitz is a persistent man, and I finally agreed to bring to him coming on board. To this day, that was one of the best business decisions I have ever made. So needless to say, we are in extremely capable hands with Jason this morning. And if you want to check out that article, you can go over to Forbes and read the full thing. So when Jason is not brokering deals and building businesses, he enjoys being a spokesperson at conferences and business schools. He actually volunteers as a coach or a mentor for folks who just sort of want to start dipping their toes into entrepreneurship. He's written a book called The Bathrobe Millionaire. And if you can imagine, he has any free time after all of those activities. He enjoys spending it with his family and his kids, traveling, reading, hiking, and challenging conventional wisdom on a range of topics. Jason, is there anything I've missed? I know I found your background fascinating.
So that was quite an intro, and I'm almost wondering, who are we talking about? That person sounds phenomenal. Yeah, thank you for that. No, I don't think you missed anything. And, thanks for having me. Some of the people watching may wonder, why have they not seen me? I've been at Quiet Light now for almost 12 years, and I've kept a relatively lower profile, trying to help people one-on-one. And the reason I wanted to come on now is in 12 years, I've never, ever seen a market anything like what we're seeing now, particularly for Amazon businesses, particularly for bigger ones. So that's why I thought it was important to get out there and talk to folks who have these businesses who may at some point or other think about selling.
Awesome. Yeah, it's quite a crazy time. Never mind everything else going on in the world, but specifically for Amazon businesses. So Jason, as you mentioned, some people may not be as familiar with you since you sort of have been behind the scenes a bit more, but maybe give us a quick background on how you got started into entrepreneurship, and what your initial journey was like.
Okay, awesome. I came of age in Silicon Valley during the original dot-com bubble in the late 90s. And I was an entrepreneurial person at heart. And I started a company, and I spent about a year trying to raise money. That's what you did back then. You went knocking on the doors of the venture capitalists. I got rejected easily 30 times. As Mark mentioned, I'm persistent, so that doesn't faze me. But it was interesting. I hired a broker to help me raise money. And there were just small, tiny little course corrections that he guided me towards. And next thing you know, a VC wrote us a check for $10 million, which was, at the time, that was, pretty good money. And about a month after that, the whole dot-com bubble started to unravel. I raised the money in February 2000. Starting in mid-March, the whole bubble that had been inflating for 5 years started to unravel. And I got to be on the front lines of both the good and the bad. A couple years later, I found myself running a lead generation business for realtors. And that did fantastic right through the housing bubble. And then when the bubble burst, I got to witness firsthand how quickly things went down. And what's interesting now is I feel like we're in the golden age for Amazon FBA businesses, especially bigger ones. And it may or may not last, but having been on the front lines of the last two bubbles, I know that if things go south, they go south quickly.
Got it. Yeah. And just for everyone that's tuning in, if you have any questions at any point, please feel free to put them in that Q&A chat box, and I'll make sure that we get to them throughout the next hour. And if you would prefer to ask live, of course, you can raise your hand, but it's the quickest way to get your question answered is in that Q&A chat box. So if any questions come up at any point, you can plop them in there. So Jason, you just mentioned how, especially for these bigger Amazon deals, it's a big time. And you've mentioned that a couple times now. So can you speak a little bit for these bigger deals? What about these essentially, maybe not significantly larger, but somewhat larger deals makes them different from perhaps something a little bit smaller?
You bet. So there's differences for the seller, but the biggest difference is in the buyer pool. If there's anyone listening to this who owns one of these FBA businesses, that's what we call an Amazon business internally. Even if it's fulfilled by merchant, we call it an FBA business, typically for shorthand. A couple of years ago, these businesses were generally not sellable. If someone called and said, I've got 14 ASINs and I'm selling just on Amazon, most of the buyers that we encountered said that, there's not enough diversity of product, there's not enough diversity of channels, it's too risky. And I distinctly remember in 2018, I actually turned down a business as a listing, which today would sell in a heartbeat. Now, the big difference, of course, is the rise of the aggregators. So anyone who's got one of these businesses is probably being contacted constantly by aggregator firms, which are essentially operating private equity firms. They're usually a handful of founders that have good experience with Amazon. And what's unique about this time in history is collectively, there's probably over 70 or 75 aggregators today. They've collectively raised over $10 billion. This is kind of synonymous with when I went out to raise venture capital for my first business. My first business, I did not have a website. I did not have a business plan. The concept of revenue was something we were going to talk about 3 years down the road. It wasn't even on the radar. And yet I was able to get $10 million in funding. Today, it's not exactly the same, but the amount of money flooding into the space is enormous. It's a combination of, there have been a lot of analyses that Amazon is growing quicker than most things in the economy. During the pandemic, a lot of people discovered online shopping. It's been around for 20 years, but now it's discovered. And Federal Reserve policy and central bank policy around the world has made it just very it has created cheap money. It's very lucrative to borrow large amounts of money. The interest rates are very low. This has led to a convergence of firms having similar ideas of, let's collect Amazon businesses. And these firms are in a mad dash to compete with each other. From what I hear from my vantage point is, out of the 75 plus, a lot of them may or may not be around in a couple years. It's sort of this fight for survival, which again, in my .com days, a lot of the firms, 90% plus did not survive. But right now we're in the bidding war phase. And just in the last couple of months, some of these firms have done such big capital or debt raises that they've also simultaneously discovered they can buy 100 FBA businesses for $1 million, but then they have to run 100 different businesses, or they can buy one business for 10, 20, $30 million. And it's easier to operate. So I think a lot of these, aggregators are hitting the hitting the pain point where operating is more of a hassle than they had anticipated on their spreadsheets. So they're getting much hungrier for these deals. Anyone that owns one of these businesses, you've got choices. Certainly, there's three, in my mind, there's three big choices to make. The first is, should I sell? And, my experience of 12 years of this is the decision to sell is a combination of personal priorities and where the business is in its growth curve. If your business is on this kind of a trajectory and you anticipate that it's going to keep going unencumbered, probably you're best not to sell right now, because the value of the business is mostly based on the bottom line earnings. So if those are going to double, even if the multiples contract or whatever, you're probably going to do better to wait. That said, a lot of us don't know where the business is going. We don't know, did I have a COVID bump? Are container costs going up? Is inflation gonna, chomp my business to death? So if you are thinking of selling, my advice is, when you're on this curve, you don't want to wait till things flatten out. You want to sell when there's still some gas in the tank for the next owner. And the reason is, the sales process itself, from the time you make the decision to sell until the prep work is done and the listing is ready, and then we get offers and then the offers close, several months can pass. And if the business hits a flat or a down spot during that time, it can be really detrimental to the deal. The deal can get retraded, the price can be adjusted, or a deal can fall apart. So this is one of those, Boy Scout be prepared kind of moments where you want to be thinking about it ahead of time and take action ahead of time. So the first decision is, should I sell? So the other half of that is emotional. When I sold my business through Quiet Light, I dreaded getting up in the morning. I just did not want to deal with the product, the customers. It just wasn't fun anymore. I think you want to consider selling before you get to that point, because by the time you're at the point of burnout, you're not in the game. You need to be in the game to get the best deal for a sale. So first choice is, should I sell? Second choice is, when should I sell? Now, as mentioned, having done this for well over a decade at this point, I've seen different trends come and go. And historically, I've almost always, if I looked at a business that had room for improvements, I would say, go do these 5 improvements, come back to me in 6 months or a year. There wasn't that much urgency. I felt pretty confident for most of that time that the market would maintain. Now I'm a little bit less confident. I'm seeing weird dichotomies that I haven't seen before. I'll give you an example. I've always said that there's a price at which any business will sell. And I've tested that. I had a business that was losing $300,000 a year sell for $1 million. I had a business, one of my listings, they hadn't sold anything in 8 months. Their website was kind of a shell. They were having issues with the vendors. I still got 5 offers for that listing. I was always under the opinion there's a price at which it'll sell. In recent times, I'm finding that not to be the case. I'm finding there are some businesses that, even at a really low multiple, the buyers just aren't going for. And the ones that are selling now, and now being late October 2021, and I presume this will go on for at least a number of months. If a business is qualified for an SBA loan, meaning a buyer can buy it with an SBA 7A loan, those are getting lots of offers. If a business is an FBA, a fulfillment by Amazon kind of business with certain characteristics, those businesses are getting lots of offers. But a good old-fashioned e-commerce business where it doesn't qualify for SBA, but it's a good business. I mean, we are seeing some weird things where it is much harder to find the cash buyers right now. What this is telling me is that we are in an OPM and other people's money market where anyone that can borrow money, and by the way, the aggregators often are relying on a credit line to make their purchases. Buyers are really preferring the borrowed money route. So again, it makes it kind of a prime time for people with the bigger FBA businesses. And then so some of the aggregators are changing their criteria lately, where they're being a little more open than they were 3 or 4 months ago, as far as the number of ASINs or SKUs or the channels, whether you've got half your sales on Shopify. What we're seeing is basically the buyers are more competitive. So then the first decision, should I sell? Second decision, when should I sell? The third decision is, should I go it alone or should I hire an advisor, Quiet Light or one of our competitors or an investment banker or something like that? That's a personal decision. Obviously, the downside of hiring an advisor, you're going to pay a fee. Duh, nobody enjoys that. I certainly did not like paying the fee when Quiet Light sold my business, but it was, in my mind, the cost of doing business and well worth it. And then the other downside of hiring an advisor, there's probably going to be more prep work up front. We're going to grill you a little harder on the front end to get your business ready to list. Now, okay, so then we offset, what are the advantages? The advantages in my mind are, if you have an experienced advisor, there's a couple potential benefits. One of them is we are on the front lines dealing with the buyers. So within the aggregators, between the people at our firm, for instance, we know a lot of the CEOs, we can get them on an email. We can sometimes jump the line to get a higher level person looking at the deal and committed to the deal. It also gives us somebody to go to in the event that things start getting rocky. Sometimes we can get better deals for the client. I don't want to overpromise on this, but we've definitely had anecdotal stories. The best one was one of my colleagues took a business where they had gotten an offer from an aggregator, and he repackaged it and ended up getting them, I think, about 2.5 times as much. Now that's unusual. Your results may vary, and I'm certainly not going to promise that, but we have been trained in how to look at the profit and loss statement, how to maximize the earnings upon which the valuation is based, and so on. So we may be able to get more. But the biggest thing, I think, is for somebody who has done the impressive job of building up a business that has $1, $2, $3, $5, or $10 million in EBITDA or seller's discretionary earnings, you may sell your business once in a lifetime, whereas we're doing it all day, every day. Just like when I raised venture capital 20-something years ago, there were just a couple minor things I was doing wrong, which is why I got rejected 30 times. And, just little bits of coaching made a huge difference on the end outcome. So that's one of the other potential benefits. So what I found is everyone is being contacted left and right by aggregators. Getting an offer is not terribly hard. It's getting it to the closing table, which that's where the nuance is involved, I think.
I mean, there's so much good content in that answer. I have some follow-up questions for you, but I first just want to comment on, I love the idea of people discovering online shopping during the pandemic. I think that's it's very true. And it's sort of funny to think about, given it's obviously been a thing for quite some time. You've mentioned aggregators a few times and sort of navigating those folks, and then just decision makers in general. So if I'm, as an FBA seller, looking for, like, how do I really know if I'm speaking with that key person? How do you navigate that process? How do I know I have all the aggregators that are an option to me on the table? It sounds like perhaps working with a consultant is helpful for that, but if there are other tips and tricks you can provide, I think that would be helpful.
Absolutely. So there's a couple points to touch on. First off, I'm talking a lot about aggregators. Clearly, they're not the only buyer. The aggregators on our list of buyers represent, 75 to 100 out of tens of thousands of buyers. There's also private equity firms. The reason I keep coming back to the aggregators is specifically for FBA businesses right now, at this point in time, it's kind of a golden age, because with the aggregators, generally, they're not making the seller stay on board for a couple of years. You get your freedom relatively quickly. The multiples have mostly converged, where you'll get as much from an aggregator now as you would from private equity. And there are a lot of other buyers out there. For the ones that make, credible offers, absolutely, we will consider those and accept those. But with the aggregators, I mean, we've got an internal book where we're keeping track. How many offers do they make? How many do they close on? Do they keep their word? Do they change the offer? If they do change the offer, was there a good reason? All that kind of stuff. Now, your question had to do with the decision maker. This is one of the most interesting things I find as an advisor. I deal with a lot of buyers who represent that they are the decision maker. And what I find is that's almost never the case. Sometimes it is, often it's not. Everybody reports to somebody. So, again, let's go back to the aggregators. Within the aggregator, usually I'll have a front end person and, I'll build a good rapport, but they've got a boss, and then there's a CEO. And then the CEO often reports to an investment committee. Now, my goal is to get as close to the final decision maker as possible. The final decision maker, in my opinion, is the person that writes the check. Whoever gets to do that wire is the person I want to get as close as possible to. It's not always possible. I'm not going to get to talk to the investment committee. With a deal that qualifies for an SBA loan, I don't get to talk to the underwriter at the bank. But, we mentioned I'm kind of a persistent guy. I will politely keep kind of pushing it to talk to the next higher up. I'm not going to go over the head of the person I'm dealing with. I'm going to ask them to bring in the higher up person just so I can say hi. And this becomes important because a lot of deals hit a snag. I wrote an article a long time ago called The 11th Hour Freakout about the tendency of buyers to discover something at the 11th hour right before a deal closes, which they certainly could have known a month or 2 months ahead of time, but all of a sudden it jumped onto their radar. There are skills of how to deal with the 11th hour freakout and still get the deal closed. And one of them is, being as close as possible to the decision maker so that, I've got the opportunity to explain to them why whatever it is that's freaking them out, probably it is having elevated importance in their mind at that time. So again, that's one of the biggest mistakes that I see from a lot of people. A potential seller will call me and say, well, I'm already talking to this buyer or that. Okay, that's fine. I know you are. How high up in the food chain have you gone?
I love that. And it just reminds me, I feel like next time I'm having any sort of customer service issue, Jason, I might give you a call, but just with your persistence and ability to find the true manager in the room.
Yeah.
Yeah, it is important though. And you mentioned mistakes, and not to harp on your rejection from years ago, but maybe you can speak to some of those smaller issues or mistakes that you were coming across or making, that as someone now who's an advisor and has gone through that process personally and on behalf of others. But for those of us who haven't, what are some of those mistakes? What do they look like? What are they? That maybe could help prevent other people from going through the same rejection process that I'm so sorry you had to go through.
Okay. So often what I'll see is by the time somebody calls me, it's a little too late. I talked earlier about that trend line. They kind of waited till here. The business is starting to go, go sideways a little. And then we put the package together, we get an offer. And then mistake number one, they start talking about the offer. They tell their parents, they tell their significant other, they tell their friends. Next thing you know, they're beholden. I told everyone I'm going to get $10 million. And, I got to feel like a big fish at that cocktail party talking about it. Here's the challenge. That puts you in the wrong emotional state. You're too dependent on that one offer. It's really important to run the business as if you're going to keep it forever and keep your mouth relatively shut. Tell your significant other, do not even think about spending the money in your mind until the day of closing. Don't think about that dream house, the Ferrari, the vacation, the retirement, whatever it is you're aiming for. Keep your game face on, stay in the game until closing, and for a month or two after during the transition period. So mistake one is sort of counting the money before it's available. Mistake number two is a big one. It's failing to disclose small things. I'll give you an example. Years ago, I had a deal where the seller had gotten sucked into a nuisance lawsuit. It was like he ended up settling it for $5,000, and it was just a troll trying to get some money out of him. He forgot to mention it. The buyer completely lost confidence. The buyer's thought process was basically, because you didn't mention this, what else have you forgotten to mention? And the trust was broken. The best way to maintain trust is disclose, disclose, disclose. Bring up small things early and often. If you have an advisor, tell your advisor, and he or she will help bridge that gap with the buyer. So some of the more common examples I'm seeing now are supply chain disruptions. The container that we ordered out of China is delayed for 6 weeks, but I didn't think I needed to mention that to the buyer. Or my container costs have gone up, or I'm affected by tariffs, or my supplier is raising the price. Any of these kind of things that, the seller may think, oh, this is just normal business. I deal with this all the time. What you need to realize is buyers tend to put hyper focus on the most recent period, the last few months and the month or 2 or 3 that happen between when you decide to sell and when the deal closes. The reason they tend to hyper focus on that is, one, it's human nature. We just like to look at what's happened recently. 2, there's a little bit of an implicit assumption that the reason you decided to sell was that you might know something that the buyer doesn't. So they're really looking carefully, is the business shifting under our feet? Now, for that reason, again, it feels, it may feel foreign to some sellers. Like, why would I talk about the bad news in my business? Aren't we doing a sale here? Shouldn't we be rah-rah cheerleading? No. What you want to be is honest. Honesty, authenticity, and integrity is what gets the deals done. Rah-rah cheerleading, you might get an offer, but what tends to happen is the buyer doesn't communicate their real thoughts. If you're always like, yeah, things are great, 100%, nothing is wrong, nothing could ever go wrong. What tends to happen is the buyer thinks to themselves, okay, this person is a cheerleader. Let's go talk privately about what we really think. But if we're authentic and open and honest and say, hey, this business is great. I do want to let you know, Mr. Buyer, we have a container that's coming in late, but we're going to make up for it with some air freight just so that we don't run out of stock at Amazon. And by the way, Amazon reduced our restock limits a little bit, but nothing to fear. We have a 3PL and we're going to drip the inventory into Amazon. Yeah, as long as we present the reality and the solution, what tends to happen is the buyer realizes we're not trying to hide anything. Then they are much more likely to tell us to our faces, okay, we're getting nervous, here's why. When they do that, it gives us a chance to counter whatever their concern is. So we want the communication to stay fluid, and the way to make it stay fluid is to disclose, every little thing, even if it seems like something that may not be that important.
I love that perspective, Jason, because negotiation, I think everyone always thinks like keep all of your cards as close and as covered as possible. And the reality is that doesn't help you. It just creates more and more distrust. And obviously that's not productive. And the reality is nothing is perfect. So I have to imagine there is not one FBA in the world that has no issues or no, tiny little skeletons in its closet that don't have to be a big issue, but could become one if you just pretend like they don't exist.
That's very true. And I remember back in the 90s, I read a bunch of negotiating books, and they all said the same thing. They all said, don't be the first one to name a price. Whoever speaks first loses. Now, the problem was we were all reading the same negotiation book. So when I would find myself at the table, nobody would say anything. We would dance around. So what do you think it's worth? I don't know. What do you think it's worth? Let me trick you into being the first one to talk. Okay. That stuff is out. Authenticity is in. One of the interesting stats I looked up this morning in our internal database, a large percentage, it was like 75 or so percent of our FBA businesses are getting multiple offers and going for above asking price. What that means is we don't have to be so concerned about, oh my gosh, if I say the wrong thing, it's going to hurt the price. The market will determine the price. It's kind of like selling a house in a coastal area. If anyone's ever done that, part of the strategy is you price the house reasonably, and then you try to get multiple offers, and they'll bid it up to wherever it's appropriate spot. We find the same thing with selling these businesses, but the things that can kill it is if the buyer does not trust the seller because they think the seller is a little bit too tight-lipped, that can hurt the odds of closing.
And as you said earlier, there are so many FBAs. It's such a hot market that you're not, if you're not sharing all the information, they can just go to someone else who is.
Yeah, so that's an interesting point as well. So the buyers are looking at so many of these deals, and often they're forced to make a quick, how many of our boxes does it check, and they'll brush it aside. If I can present a deal in a way where I'll show the buyer, hey, we check your boxes, and I can assess what I think the objections are going to be. So for instance, let's say your business did really well in 2019, but then in 2020 you had a huge spike because all your competitors ran out of stock. But now in 2021 you're down from 2020. That's going to be an objection. It's going to come up, and we're not going to hide from it. So the best thing is, when I present upfront, let me address that concern and say, look, 2021 is down compared with last year, but it's up compared with 2019. So, if the pandemic had never happened, we're still on an uptrend. Give me a chance to present things in a favorable light rather than hiding from that.
That's great. Jason, we have a question from the audience,
Okay.
And it's about deal terms. So in addition to higher price, how do deal terms differ? Are there things they should be negotiating for that constitute a good exit? So maybe you can speak to that and sort of how that differs from maybe other types of deals.
Yeah, I absolutely. That's a great question. Most of the deals for these FBA businesses are relatively formulaic, where the first thing we do is calculate what's called your seller's discretionary earnings, the SDE. There, you can find definitions of this online, but it's basically, if you wanted to keep every penny from the business that you could, how much could you keep? So you don't pay yourself a salary, you don't write off that quote unquote business trip to Hawaii. If you got to keep all that, that's your SDE. Now, our job is to maximize the SDE. I'm going to look for things called add backs, going to make the biggest SDE. When the offers come in, generally, they are the SDE times a multiple plus the value of your landed cost of inventory. The terms are typically a certain amount upfront in cash, then what a lot of buyers are calling a stability payment. So as long as the business does okay for the next 6 months or a year, you'll get that payment. And then there's an earnout on top of it. The earnout is typically based on growth. So the the buyer is going to, you're selling to them, they're selling to you also. The buyer is going to say, look, we've got all this expertise in-house, and we're going to take your $3 million in SDE and grow it up to 5 million, and you're going to get a piece of that in the earnout. Now, I think part of the question that the viewer asked was, what are the important things? I might be a little biased because, as I mentioned, I was on the front line of 2 bubble periods where things were going like this, hit a wall, and then crashed, the dot-com bubble and the housing bubble. I tend to think that if I were a seller now, that I would want as much cash upfront as possible. And there can sometimes be trade-offs. Sometimes I can get more cash upfront for my client in exchange for possibly a smaller earnout. Not everyone is wired that way, but keep in mind, if you are an entrepreneur who is perhaps in your late 20s, mid 30s, and you've been running your Amazon business for maybe 5 or 6 years, you've never seen a recession during your entrepreneurial career. So you may be a little more inclined to say, I want to roll the dice and take a bigger earnout. And absolutely, it's your decision. But generally, what I find is when the sellers are being honest with me, what they say is, I want as much cash upfront as possible, and I don't want to keep working in the business. And again, the thing I would encourage is, if you hire an advisor, be honest with them. If you're going direct to the buyers, be as honest as you can about that. Obviously, you don't want to scare them away, and you want to keep options open that fit within their realm, but you want to express what your true desire is. But the short answer, the big things are usually there's cash up front, a stability payment, an earnout, and then money for the inventory as well.
A lot to think about and decide where your priorities lie.
Yeah.
Thank you for that question. And if we still have a little bit more time left, so if there are any other questions from those watching, please feel free to plop them into that Q&A chat, and we will get to them before we have to end. In the meantime, I have a question for you, because we've sort of talked about it a little bit throughout this past hour, but specifically with bookkeeping. And I think a lot of people are under the impression that, with an 8-figure deal, it's significantly different than it is with a 5 or 6, 7-figure deal. Can you speak to that? How important is bookkeeping? Is it that different? What should people be thinking about?
Okay, so there's a couple interesting things. Bookkeeping, I think, is very important. One of the interesting things, the tax returns are less important on these FBA deals, depending on the buyer. In fact, I've often had the buyers not even request the tax return. So that's kind of a sigh of relief, because we all know the tax returns don't always follow the bookkeeping. The bookkeeping, though, like having a profit and loss statement and a balance sheet being done in accrual basis by a professional bookkeeper, is eminently worth the money. So what we find is, let's go back to the aggregators. Sometimes they'll say, we don't need a P&L, just give us access to Amazon and tell us what your cost of goods are, and we will create the P&L ourselves. I do not recommend that, especially for an 8-figure deal. What often happens is the P&L they create is not accurate. They don't know if your cost of goods changed from January to March. What were you selling each month? What was the actual cost? It's harder to see the trends. Also, they don't always know, do you have other expenses? Do you have some VAs in the Philippines? Do you have a customer service person in Utah? Whatever it is. When we have an accurate P&L, then the buyers have a heck of a lot more confidence, and they tend to come out with their best foot forward. They tend to make their best offer up front rather than holding back because of the unknown. Now, bookkeeping intimidates a lot of entrepreneurs. They say, I started my business, I didn't know it was gonna get this big. I didn't really think about bookkeeping until later. Okay, you don't have to sweat it. There are e-commerce bookkeepers, and anyone who emails me, I'm happy to recommend some of them. They will do a look back. They'll go back through your bank statements, your invoices, that kind of thing, and they'll create the profit and loss statement for the last few years. And they will do it in accrual basis, which gives a much better view of the business. In my experience, I mean, it's hugely important to have good bookkeeping. If you don't, the odds of the offer that you've received falling apart or getting seriously renegotiated are very high. If you do have clean bookkeeping, the odds of the deal going through are very much better. So yeah, I think it's huge. And on the 8-figure deals, it's more important. The buyers have an expectation that you've gotten to this level of sales, you're selling 10 or 20 million bucks of merchandise a year, you should be running a more professional business as well.
Got it. So it's important regardless, obviously, but there's just a higher bar in terms of what your buyers might be expecting from you, the larger and larger your business gets, which makes sense.
Correct.
We have another question from the audience. Do aggregators hit their earnout goals? How likely is it that I will get paid the full earnest amount?
That is a fantastic question. And the answer is nobody knows. Now, when you look, well, no, it's the true answer. So when you look at the history of the aggregators, a couple of them have been in business for, maybe 3 years or so. The vast majority of them basically got funded in 2020 and 2021. Some of my best successes at getting the best offer were the newer aggregators because they were very hungry to get their first or second deal. Now, for the earnout portion, that's always the question. I'm asking them, prove to me your ability. Why is my client actually going to see the earnout? And usually they'll give me 1 or 2 anecdotal stories that show we took this business and we 5x'd it. Obviously the earnout is getting paid, and that's fantastic. I believe them. They definitely, most of them have had some great success with that kind of thing, but there's not enough time to know. So these earnouts are often written for 3 years, 4 years, maybe even 5 years. And we've been in one type of economic environment, low rates, easy money, big online shopping. That environment might change. So the earnout legitimately is a risk, which again is why when I have candid discussions with sellers, usually they will tell me, and I will agree, let's get you the most cash at close as possible, because that's the one thing that you can rely on is the money that's already in the bank. So it's a fantastic question. And anyone that tries to give an answer of the percentage of earnouts and whatnot, they're not basing it on enough data. There has not been enough time to know for sure.
Back to that integrity and open honesty that, which I think is great.
Yeah, I mean, and it's just a factor of time. If you have a 5-year earnout, go ahead and show me an aggregator that's had 5 years of track record with enough businesses to see how well they've done.
Yeah, for sure. And Jason, we're not quite done yet, but we'll be done shortly. Is there anything that we haven't gotten questions on that you'd like to speak to based on sort of where our conversation has gone?
I think the big thing is don't be intimidated. Sometimes someone might have questions and either they feel that the question is a little bit too novice and they're embarrassed to ask, or more likely, they don't want to talk to an advisor because they think they're going to get the car sales pitch. Hey, sign up with me right now, whatever. Let me assure anyone who's watching, that's not the case. You can email me at the email on the screen and say, I'm talking to 3 aggregators and I'm probably going to sell my business to one of them, but I've got this question. Does this seem right? Does that seem right? I'll give you my feedback and wish you luck. There's no pressure. There's no push to sell, but don't be shy about talking to people that have more experience in the space than you might, because there might be little things that could make your deal significantly better. So that's the biggest point I would leave. Anyone that wants to reach out to me, whether you're thinking of selling, whether you're selling yourself, whether you're even selling with another brokerage, it's fine. You can always send a question and I'll respond.
That's amazing. And I think an awesome resource that you're willing to speak. And you do so much one-on-one chats anyway, that why anyone that's watching, please feel free to reach out to Jason. And then Jason, I have just one more question for you. We've talked a lot about, like, the mistakes and all those things that you wish you knew, when you started out. Now that you're sort of on the other side, what's been like the most impactful or enjoyable experience that going through this process and all the ups and downs has led you to?
I love the American dream. I love that in America, anyone can become an entrepreneur. A couple months ago, I was on the phone with a gentleman and he asked for a value of his FBA business. And if memory serves, it was about $1 million, give or take. And we started talking about what his career path had been up to that point. 2 years previous, he was delivering pizzas. Now he's got a business that he could sell for $1 million. And he decided not to sell. He's going to grow it, which I love. I love the fact that if you want to run an online business, all the types of discrimination that happen in the workplace, whether it's ageism or based on, gender identity or color of your skin or whatever, in the online world, you're not seeing anyone. You can order from a supplier, you can sell on Amazon or a Shopify site. There's not those barriers. And really the only barrier is your ability to figure out what does the consumer want and how can I fulfill that? I love that. So I never get bored of speaking with entrepreneurs who are full of hope and excitement and, who've gotten beat up a few times, but they're persistent and they keep coming back. That just makes me happy.
That's like you became part of Quiet Light because you just couldn't get enough of the entrepreneur world, which I think is awesome.
It's fun.
Yeah. Well, Jason, we'd love to have you back. Obviously you're on the team, but in this monthly AMA series, especially maybe in a few months, we'll check in on where all the aggregators are at and how that is still, if that's still a thing, or if it looks like it's becoming a more permanent thing, in the buying and selling world. Thank you everyone who joined us today. Once again, we've said it a few times. If you have any questions, big, small, professional, personal, for Jason, his email, if you hover over his Zoom box, or for those of you who are watching perhaps later, that's jasony@quietlight.com. So please don't hesitate to reach out to him. Once again, we have tons of content on quietlight.com as well, if you're just looking to peruse all things entrepreneurship. And it's been an awesome hour. We've learned a ton. This has been great chatting with you, Jason. I think your background is fascinating. And I love the open, honest approach to this process, which can be really intimidating, but I think having that angle on it is awesome.
Thank you, Sam. I really appreciate your time.
Thank you, everyone. And we will see you next month.